Okay, welcome back to 2020 trading. It has been a while. It has been a long while, but there are reasons for that. And I'm going to make another video just talking about what has happened since the last time I made a video, which was in July. I think it was the end of July. That was a long time ago. Between then and now, a lot of things have happened, but I'm going to make a separate video for that. But today, I just want to talk about two stocks that I am already accumulating, and I'm going to explain why I'm accumulating these stocks for the long term. By the way, this is for the long term, not for a day trade. But if it pops up, I wouldn't say no to taking profit. So now the first one is Hyliion, Hyliion. Now this is an electric vehicle company. Now, you probably know this, but clean energy is the future. Clean energy is the present and is going to be the future. The pandemic has changed everything. It has changed the present, but it has also changed the future in ways that we cannot even begin to imagine. Now, you probably know that the president of the United States, or we have a new president-elect. He hasn't been called by the officials, but I think all the major news outlets are saying he's a new president-elect. So we'll go with that. Now, the man has pledged $2 trillion to climate change. Now, $2 trillion to climate change. We don't know how much of that is going to go towards electric vehicles, but this company I'm talking about right now is an EV company, is an electrical vehicle company, and they will definitely benefit from these $2 trillion that the president has earmarked for climate change. Now, Hyliion is a software company. Now, there's one good reason. There's one very good reason why I think that Hyliion is a company for the future. Now, they are not actually making their own vehicles. So basically, they are a software company, and the idea is that this software company is going to make electrical vehicles more efficient. So, for example, you have your Tesla, but they have to make their own vehicles, right? They have to produce their own vehicles, which makes it a lot more difficult and it takes a lot more money to do. But with Hyliion, what they're going to be doing is they're going to make these EVs more efficient. So essentially, they're not going to be spending too much money. All they have to do is use their good technology, use the good electrical and software engineers to produce solutions that make these cars or these trucks, actually, they're not cars, they're trucks, to make them a lot more efficient. So that's a good thing. It means that the margins are going to be great. It means the gross margins will be great. It means the EBITDA margins will be great. And that's very good. Now, so because Hyliion doesn't actually produce their own vehicles, they have to have partnership with other companies. So they're already in partnership with Dana Motors, which is a good thing. That gives them credibility. But their success is going to be dependent on them making other partnerships, right? So we're expecting that in the near future they will begin to announce even more partnerships with other companies. By the way, they have the earnings report on the 12th of November. Today is the 8th of November, which is Sunday. So they have the earnings report for the previous quarter on the 12th of November, which is on Thursday. So I think that we're going to get some announcements. I think we're going to begin to announce some more partnerships. I don't know that, but if they do announce some more partnerships, then we will obviously see, or most likely see, an increase in share price. But even if it does drop, I'll be looking to add to the position, just because I'm in for the long term, and I believe that this one is going to head back towards its all-time highs, which is around 60. Okay, so let us take a look at the technicals. But just before that, let me explain something and be clear about something. So Hyliion didn't come to market through the conventional method. It came through something called a SPAC, a special purpose acquisition company, which was Tortoise acquisition. So they merged with Tortoise acquisition, back in June of this year, right? So at that time, I believe Tortoise was trading at about $10 a share. And after the merger, of course, the price jumped and it went up to 30. It pulled back a bit and it continued up and hit a high of about $57 a share. Now, since then, and that was around August actually, and since then it has gradually come back down and hit a low of about $19. And right now it's at $22.70. And I'm in at an average price of $22.35. So very interesting price action here. Plenty of volume. It trades about over 5 million shares a day. So there's plenty of interest in this company, and I expect it to continue up. Again, like I said, it's going to be very volatile. There is the earnings report on Thursday, so depending on what they say, this might pop or it might even drop. But again, regardless of what it is, I think I'll be looking to, if it does drop, I'll probably be looking to add to the position, but we'll see what happens. Again, like I said, this is for the long term. This is not for, a one-day play. It's not an intraday trade, so we'll be looking to stay in this one for the foreseeable future. So the second company I'm looking to accumulate, I don't actually have any position in this company yet, but I'm looking to start accumulating positions. As I get money, I'm going to be putting them into the stock. Now, I look at this environment as you're looking at for companies that are post-pandemic winners, because you're going to have post-pandemic winners, you're going to have post-pandemic losers. And I believe that this one is a definite post-pandemic winner. Now, it's called Fastly, FSLY. FSLY is a content delivery network company. So, they have customers like TikTok, Amazon, all these big companies are all their customers. And essentially, they just help those companies to deliver content and be more efficient with their content delivery. And they're very good at what they do. And I think that going forward, because there are more people spending time online, you have e-commerce is growing at an amazing rate. And that's why you see companies like Amazon doing really well. These guys, Fastly, are going to be beneficiaries of this new normal, this growth in e-commerce. They're going to be beneficiaries of it. They're going to be making more money. At this point in time, they're not profitable yet, but that's a good thing, because a lot of the times, when the company becomes profitable, that's when the price really shoots. So I think this one, they're definitely going to be profitable. That's what I believe. That's what I think. But the question is, why buy now? And to answer that question, I'm going to go over to the stock chart. So here we are looking at the chart. Now, this company has come a long way since May of this year, right? They were trading at about $20, about $22 in May, right? And they've gone all the way to 135 as at October the 13th, right? $135 a share, from all the way from 22, right? Now, since then it has pulled back to the 60s and 70s. But here's the thing: the question is why the pullback? Why this huge drop? And the reason it dropped 50% or more is because they revised their guidance for one quarter. They revised the guidance from about $73 million to about $70 million. So about $3 million reduction, right? Now, the reason for that reduction is because of TikTok. TikTok is their biggest customer, and they're not going to be they weren't going to be making as much money in that quarter from TikTok as normal, because of the issue that TikTok had with President Trump's administration wanting them to sell their TikTok US to a US company, right? So there was an issue there where they weren't going to be getting as much money from TikTok, and therefore they had to revise their revenue guidance, and that's why it dropped by 50%. But the question is, does that change the business model? And the answer is no, it doesn't change their business model. The business model is intact. They will continue to grow. they are expected to continue to grow in this environment, in this post-pandemic e-commerce content consumption environment. I don't see any reason why they're not going to continue growing. And they are a growth company, and growth companies do have wild swings, and that's why we've had this wild swing from 130 to all the way to 60s, right? So the business model is intact. There's nothing wrong with that. The revenue guidance is only temporary, and I believe that this one, I'm just going to be accumulating. If it drops even further, I'll look to accumulate even more. And it's only a matter of time. Once these guys begin to make profit, the sky is the limit. That's what I think anyway. I will see what happens, but I believe that this one is, like I said, a post-pandemic winner. For me, it is. Oh, by the way, a TikTok community took the issue of the TikTok ban in the US to the court, and the court actually stopped the ban. So that's another positive thing, which means that potentially TikTok is not going to be banned in the US, and these guys are going to get their revenue back. Besides, President Trump's administration is due to leave office. So therefore, the whole problem with TikTok being banned in the US may just disappear altogether, which means that the reason for this drop, the reason for this 50% drop is gone. And for me, that means that the potential is that this, if they meet their revenue and earnings estimate for the next quarter, it's probably going to be back where it was by the end of next quarter. So, and that's a nice pocket there for this thing to move up. So again, you have to look at the checks and balances. What are the positives and what are the negatives? And I think that the negatives they've almost dissolved. They will dissolve, and we will potentially see this one begin to hit all-time highs again. So again, this is going to be volatile. So if you get in at 73 and it goes down to 50, it's not impossible. But again, business model hasn't changed. I think it's a growth story, and it's going to continue growing. So again, it's long-term hold. So if you're looking to hold for the long term, you shouldn't worry. I think anything around this level, I think is fine. So I'll be looking to, like I said, I haven't actually started buying, but I'll be looking to accumulate. I'll be looking to fight for price, meaning I'll be looking to buy on down days, any day that the market is red and this company drops with the market. I'll be looking to accumulate. So we'll see how it goes, and we'll do an update on this one. So that's the end of the two stocks I'm accumulating this period, and we'll see how it goes. And I'm sure that at some point we will be doing a review, and we'll be smiling to the bank. So like, comment, subscribe, turn on that notification button. But the best thing you can do for me is share this video with somebody you think might be interested in trading and investing. I'm sure you know somebody like that. Do that for me, and I'll see you at the next video. Peace.